Good morning. It's Jeffrey Christian of CPM Group. It's about 5 minutes after 11 o'clock on Tuesday, the 1st of October here in New York. Gold's trading around $2,675 and silver's around $31.63 as we speak. I want to talk about central banks and their gold policies and their recent practices today. I have two charts here. This is annual gold gross purchases, gross sales, and net purchases or sales by central banks since the year 2000. And we've talked about this. It's from our precious metals advisory. It also shows up in our gold yearbook. We have been in a situation since around 2008 where those central banks that had accumulated a lot of gold during the with gold era and previously under gold standards were disposing of some of their gold to raise cash in currencies to defend their currencies against depreciation. They had sold pretty much what they wanted to sell by 2008. So the period of larger sales, which really started around 1989, was diminishing by 2005, 2006, and pretty much disappeared by 2011. Meanwhile, other central banks that had not accumulated a lot of gold because they were not major trading counterparts prior to the 1980s, 1990s, had a lot of dollars that they had accumulated in their reserves, and they started buying gold to diversify as part of a broader diversification. They also were buying other currencies, and other currencies, minor currencies, went from virtually nothing to about 10% of their monetary foreign exchange reserves over the last 40 years or so. But around 2008, those central banks started buying more gold. You will recognize, of course, that gold went from $270 an ounce when central banks were selling it in the year 2000 to about $1,000 when other central banks started buying. So there were central banks that were selling low, and there were central banks that were buying high. It's just what it is. Right? This is annual data. I also have a chart which shows you the monthly data over the last 3 years, or two and three quarters years. This goes through August. That's the most recent data. And this is important because, and the reason I'm speaking about central banks is that central bank purchases and sales are very important to the price of gold. The fact that central banks have been consistent buyers for the last 15 years or so has been a very positive factor pushing gold, supporting gold prices and helping prices to rise to these high levels. But in addition to that, there's been a tremendous amount of misinformation and disinformation. Difference being misinformation, people not knowing what they're talking about, disinformation being consciously knowing that what you're telling people is not true. And there's been a tremendous amount of misinformation and disinformation about central banks' gold over the last couple of years. It's always been the case, but it's gotten worse over the last couple of years, since late 2022. And it actually has gotten even more worse, or worser, since the last few months. You've had this enormous amount of misinformation about central banks, and you keep hearing central banks are stacking up gold hand over fist. They're racing to add gold to their reserves. And then there are the conspiracy theorists. Well, central banks know that they're going to move away from a dollar as a de facto reserve currency, which you simply can't do fast. It's something that's going to take decades to accomplish. Just utter nonsensical comments. There are also just people who don't understand, and they misrepresent how much gold is there. They see gold moving from Europe into Hong Kong, and they assume that that's central bank gold purchases, and they don't seem to realize that most of the gold jewelry is manufactured in Asia, And a lot of the gold that goes into that jewelry, as well as electronic components, goes through Hong Kong. But there's a lot of just totally spurious misinformation and misunderstanding and very conscious disinformation. Central banks are not, meanwhile, buying gold hand over fist or racing to buy gold. And you can see here from the monthly data that as the gold price has risen since the middle of 2023, central banks have actually reduced both their gross purchases and their net purchases, right? Makes sense. Central banks tend to be price conscious, more price sensitive than private investors. Private investors will say, oh, the price is rising, let me buy gold. Central banks will try to be a little bit more price sensitive, at least some of them. Yeah. But what we've seen is that the gross purchases, which were running 2-3 million ounces a month in the middle of 2023, are now running around 1 million ounces a month. And we have this data. It will be in our precious metals advisory that we're releasing this month. But it's in their precious metals advisory every month, but we will be updating it. I was looking at it, and you can see the central banks on the net basis, while I look at my chart. Central bank gold purchases on a monthly basis this year. On a net basis, they were net sellers of 345,000 ounces in January. They bought 1.2 million ounces in February. They sold 132,000 ounces in March. They bought 1.6 million ounces in April. When the price shot up in April and May, they sold 1.2 million ounces of gold. Then they bought 250,000 ounces in June, 190,000 ounces in July, and in August it was 1.2 million ounces. You can see that little orange spike in July and August, the last two bars here. And then you can also see, those were the net purchases and sales that I just gave you. You can also see the big increase in gross sales, reductions at times, including in July, when central banks sold more than 1 million ounces of gold. Actually, more than 2 million ounces, according to this chart, on a gross basis there. So central banks are not pouring into gold. They're not racing into gold. They're not buying gold because they know that the dollar-based, and it's not a dollar de facto reserve currency. It's a dollar. It is dollar de facto. It's not de jure. The dollar is not legally or internationally chartered as the reserve currency. That ended in 1971, August of 1971. It is de facto in that 60% of monetary reserves, foreign exchange reserves, are in gold. And that is, by the way, not down sharply from where it's been for most of the last 30 years. I was listening to somebody on Kitco talking about how, gold holdings have plunged from 62% to 58%. They've been in the 58 to 62% range for most of the last 40 years. So central banks are not dumping the dollar. They're not pouring into gold. They are trying to add other currencies and gold to their reserves, but they're trying to be sensible about it. When the price shoots up, as it did April, May, June, July, they're buying less gold, right? So a little bit of there. Another disinformation, I think the guys know better, is that the Brics are having their annual conference in Russia. Russia is the presidency or the leadership of the Brics system. Organization changes on a yearly basis, and this year it's Russia. So the conference will be in Russia this year. That's sort of in deference to Putin because he's afraid to travel to other countries other than North Korea, because he's an internationally wanted person for crimes against humanity. So they will have a conference October 22nd to 24th in Russia. And you're hearing people talk about how they're going to announce a gold-backed Brics currency. I want you to know a BRICS unified currency, let alone a gold-backed BRICS unified currency, is not on any agenda for the October BRICS conference in Russia. BRICS as an organization has not said anything about being interested in either a BRICS unified currency or a gold-backed BRICS unified currency. Actually, they have. They said, we're not interested. Yeah, we're not interested. Putin may want to talk about it primarily as a propaganda tool because he knows it wouldn't work. And the other BRICS nations have said, we're not going to use gold to sell and trade with you. The gold in China stays in China. If you want to sell us your oil and gas, we will pay you dollars and euros. Yeah, sorry, Bubba, but that's the way it is. India doesn't have enough gold and has no interest in giving away its gold to pay for imports of oil and gas. And Brazil, South Africa don't have a lot of gold to use for international trade settlements. So it's just a non-starter. It wouldn't be workable, nor would it be workable to have a single unified BRICS currency. And the last thing that China or India or South Africa or Brazil would want to do is to tie their currencies in any way, shape, or form to the Russian ruble. It's just not, it's not workable, and it's not in any of their interests to do that. So there are no talking points about either a BRICS unified currency or a gold-backed BRICS unified currency on any agenda for the conference later this month. That's not stopping people who try to promote gold from saying that it's there. But, and again, I think those folks know they're lying to you. They're not telling you the truth. I don't think this is misinformation or a misunderstanding. This is a conscious effort to misrepresent this and sort of scare people or whatever into buying gold for false reasons. Sorry, but that's the way it is. Now, let's talk a little bit about gold and silver. Gold prices actually have been coming up. They reached a peak over $2,700 about 5 days ago, and they've come off a little bit. As I said, it's about $2,675 right now. It got down to about $2,640 some odd dollars earlier today. Our view is that the gold price might soften a little bit more. We are now into October. The COMEX October contract roll is behind the market. There's 1 million ounces of open interest left in the October contract. You've seen the gold price rise sharply over the last month. I mean, it started September around $2,500, got up to $2,700. It's backed off some since that point. And it could back off a little bit more over the next week or so, now that we're into October. CPM Group's view has been and continues to be that the gold price will rise more sharply late October, leading up to the U.S. election, probably into November in the post-election disaster that we expect politically in the United States, and in probably going forward. There are a number of political and economic and financial market concerns that will keep investors interested in gold and probably increase their interest in gold and in silver over the next 3 months. October, November, December, January, February, March. That's actually 6 months. But in the interim, on an ultra short-term basis, we could see a little bit of weakness in the gold price, partly because it's risen so far so fast, partly because there's just a little bit of a breathing time we are very much concerned about that stuff. I know that there are people who don't understand how we could be so crass and stupid as to think that politics have something to do with determining the gold and silver prices. But then there are probably people who think that there's going to be a gold-backed Brics currency by Christmas time. Can't help those folks. The reality is that there are a number of political issues, international, Middle East, Russia and Ukraine, China and Asian waters around Taiwan, around the Philippines, around Vietnam. There are any number of problems politically, internationally, domestically, and economically that are likely, in our view, to stimulate investors buying gold and silver over the next 2 quarters. So our expectation is possibly a little bit of softness in the ultra short term and then going back up. And again, we'll be talking about this in our precious metals advisory, where we'll be issuing new trade recommendations for gold, silver, platinum, and palladium later today, October 1st. Silver prices also have risen sharply, not only in September, but also in the second half of August. They have gotten over $32. They've come back off, as I said, to about $31.63 as I speak. Our expectation is that they could soften a little bit more the next week or so, but that as we approach the U.S. election, we would expect the silver price to rise on heightened concerns. It's just there. That's all I have for now. We have set a date, November 20th, for our next open forum, which is a question and answer session for clients. It'll be Wednesday, November 20th at 11 o'clock Eastern Time. It won't be Eastern Daylight Time because by November we'll be off of Daylight Savings Time. And it's a chance to ask questions to us. We don't have a presentation. We invite our clients to either send in questions ahead of time or to ask questions during it. We usually have an open mic that allows people to talk and ask questions orally, as well as typing them into the question place in GoToWebinar. And that will be November 20th. In the interim, you can go to our website, you can find free reads, you can buy our reports, you can subscribe to our Precious Metals Advisory, you can look into the retail investment program if you are a retail investor, and you can send us a note at info@cpmgroup.com saying, I would like to talk with CPM Group about ways that CPM Group might help me improve my investment exposure to precious metals and commodities. That's all I have for today. Take care of yourself. Be good to yourself. Be good to others. Try to do something good for the world. And let's watch the world turn.